Hello, hi, it's Adil bringing you a review of the US markets from an intermarket analysis perspective as to where we will be going this week. Okay, so obviously week commencing 10th of November 2014, so where are we headed to? And basically it all starts off with the QE blitz. Okay, so let's start off with the yen, okay? Because everything's about USD, JPY, the whole market's moved based on that. So why not go straight to the yen chart? Okay, so the yen chart on a 60-minute basis is 60 minutes is certainly basing. There's talk now of obviously the yen hurting its peers or its trading partners. Obviously with the yen obviously depreciating, especially Europe, obviously hurting Europe, and even China started to voice some concerns. And there's an article just now over the weekend that I'm reading with regards to Mr. Kuroda and how he basically unleashed it or unleashed QE and surprised his own cabinet. Okay, he sprang it on his own board members just 2 days earlier, jolting it into action to stop them making a lowball forecast that might have sunk his flagship inflation target. So it was an act of desperation, basically, and with it being an act of desperation, that's not exactly foresight or prudence, or there's no wisdom involved there. There's no thought process, really. It's reactionary. So that's not it's not a bullish sign, is it? I mean, obviously there was a tweet from an individual on Twitter, and I've retweeted it as well. And basically from FX Macro, at FX Macro, you can follow him. If the BOJ move was net stimulative, i.e., obviously it was supportive of global equities, everything should have gone up. So how did the equity markets do? Obviously, Japan was the sole index that actually rallied 5.7%. India was second at 2.8%. America 0.7%. New Zealand flat. Canada negative. China negative. UK minus 0.5% negative. Germany negative 1%. Mexico negative. Australia negative. France minus 1.6% negative. Spain almost 4% down. Italy almost 4% down. Brazil and Russia down, 6% and 7% respectively. So if it was net stimulative, i.e. it helped global asset prices, given the fact that even the pension fund is going to double its exposure to global equities, then why didn't global equities rally then on that basis? So obviously there's a reason why, and obviously give it time. It always generally tends to the information or the reason always reveals itself. Can't remain concealed forever. And obviously we're already reading it already with regards to here Mr. Kuroda being desperate because he wanted his inflation targets met, and they were under jeopardy, and obviously he's reacted in an act of desperation. Okay, so that's not exactly bullish for stock markets. I mean, if you look at it from the long-term nature, yes. Well, short-term nature, should I say. Long-term, yes. Obviously, if the yen keeps weakening, then obviously it does act as a stimulus because it helps exports, obviously, from Japan, and obviously if the pension fund keeps buying, given the fact that obviously US markets certainly seem to have broken out, then you can certainly see the market certainly moving higher from that perspective. But for now and this week, obviously with Chinese data weaker on the weekend, okay, and with US jobs, we're taking our cue from there. Given the fact that it was a light volume Friday, a lot of the markets tend to get manipulated into the close. We'll see exactly how market participants really react come Monday. And from my perspective, we're looking for a potential down move. Okay, so we're looking for a potential move lower. So looking at it from a fundamental perspective, you've got obviously America sending more troops into Iraq, geopolitics. You have situation in Palestine and Israel that's starting to heat up again. And then you have the situation with regards to Ukraine, Russia again, that's starting to resurface. So these are all concerns, and certainly doesn't bode well. Adding the fact, obviously, like I said, the weaker jobs report from my perspective out of the US. Okay, so let's see where we're headed. Okay, so basically, given the fact that the yen is now into support, that itself indicates that the stock markets or US markets or global markets are certainly going to find short-term resistance from my perspective, especially given the fact that it's starting to base now. If you look at a 10-minute chart, 60-minute chart, you can see unfilled gaps. 10-minute chart, you can start to see a potential inverted head and shoulders forming here. And if you look at a daily chart, as you can see, you've got two dojis, bottoming tail, So again, this is all indicating that we are looking for a potential reversal in the markets. Okay, when even if you look at a chart of the VIX, you can see from there that the VIX is starting to point in a base as well. So again, we're looking for a potential move lower for global and European equities. So let's see exactly how we can play that. So let's start to look at the technicals now. Okay, so bear with me. I mean, you can look at your VIX chart now. We're exactly at the just looking at the VIX chart at the moment, and we certainly seem to be into some sort of horizontal support on the daily chart. Okay, and the 60-minute chart as well. I mean, we did make a new lower low going into Friday's close, but it does seem to be into horizontal support. So that's something that we're certainly going to be keeping an eye out for. Okay, now let's have a look at the technical setup, given the fact that that's the backdrop. Okay. Okie dokie. So let's start with the Nasdaq, because that's usually an index I like to observe because I call it the chief of the US markets. It's basically in a bear flag formation with an unfilled gap below. Okay, you look at a 60-minute chart. Hopefully you can see that we've been in this bullish channel. We've broken out the bullish channel. We're making this potential symmetrical wedge, I mean, type pattern. Basically, you can observe here. I mean, let's just have a look here. Let's extend that across, and basically this is where we are. Okay, so you've got symmetrical wedge type pattern. Which way is it going to break? Obviously you've got an unfilled gap below, you've got an unfilled gap here, then obviously unfilled gap below as well. So you've got quite a few gaps that you need to fill below. Okay, so let's just draw these gaps in. There's a gap there, there's a gap there. Okay, so these are all the levels that we're looking for on that from that perspective. Okay, so with regards to the Nasdaq, the bear flag, so is that confirmed in terms of its peers? So let's have a look at its peers. So semiconductors generally tends to lead. You can argue leading, lagging, but generally is a cross market variable that we can confirm, and the strength and weakness. Okay, as you can see, horizontal resistance has held, so we are looking for a potential reversal here, and the reversal certainly seems to be in motion. Okay, so obviously we've no longer made higher highs, and we certainly seem to have broken out of this this potential wedge type pattern. Okay, so we're basically looking for a move lower. Okay, and basically we're in a bear flag, so we're basically lower lows and lower highs. Certainly seems to be in motion after the higher highs and higher lows are no longer responsive. So we're looking for a move lower. Okay, so potentially into this support zone here. Watch out for that 200 MA. So semicon certainly bearish. Okay, the biotech. Okay, the biotech certainly has started to show some signs of exhaustion. As you can see there, we're basically been consolidating for 2 days now within this bearish engulfing candle, and we're looking for a potential bear flag formation to retest the breakout level. Okay, if you look at a 60-minute chart for the biotechs, you can clearly see a HNS formation. If you have a HNS formation, the biotechs, what do you think that means for the German DAX and the Nasdaq? It means bearish, folks. Okay, now I'll certainly be doing an additional video for European stocks and explaining where the European stocks are headed, and as to why I have a bearish opinion on them as well, mainly because of obviously post Draghi they failed to basically propel higher. Okay, so that's your 60-minute chart. HNS formation of biotechs basically is a warning sign for the Nasdaq and for the semicons, and actually for global markets. Okay, from my perspective, and as I've already explained, my intermarket analysis is supports this view because the yen is into support and those are unfilled gaps above. Okay, add in the fact that you've got a weaker jobs report, so that obviously weakens the dollar side of the equation. Okay, obviously wage growth certainly is still slacking. Okay, from that perspective, so that's basically where we are as well. So and also adding the fact that obviously this so-called article with regards to Mr. Kuroda, with it being a reactionary, desperate attempt rather than a coordinated, orchestrated attempt of obviously weakening the yen or adding a stimulus to the economy. Well thought out, targeted approach is not actually the case. That's no longer the case. So that in sense should technically be risk off, and that should obviously strengthen the yen. Okay, and given the fact that obviously we have several geopolitical concerns which I've already alluded to, that in itself should support the yen as well, thereby sending USD JPY lower. If USD JPY is lower, then obviously that will force the Euro JPY lower as well. From that perspective, given the fact that the Euro has certainly bounced from the 1.24 level, now that's another. Again, I can discuss currencies and the reactions there, and obviously all the potential scenarios. But basically, the theme is stronger yen due to geopolitics. Okay, so that in itself should send the US markets lower, and obviously the technical patterns are already indicating already. Okay. Right, okay, so let's go to the actual Dow now. I'm going to look at the Dow. Okay, the Dow itself, yes, certainly very bullish. One can't argue that this is certainly looking to reverse. It's very hard for you to argue that looking at a chart. I mean, definitely bullish. The only thing that I would say is from a Japanese candle perspective, you've got Hanging Man. Okay, so those of you that are big fans of the Hanging Man or big fans of Steve Neeson's candlesticks, just bring that up for you, bear with me. Hanging Man candlestick, just give you an example. Hanging Man definition based on Investopedia, and there you go. Okay, so Hanging Man, as you can see there, perfect description. If I just take that across, as you can see here, let's go back to our chart of the Dow, and there you go, Hanging Man candlestick. Okay, so if I go and zoom in, look at a 60-minute chart, certainly bullish. From a 60-minute chart perspective, very hard for you to argue to the contrary, but from a 10-minute chart perspective, we are into that double top, triple top resistance. Okay, so we'll just keep an eye out for that, and we'll see exactly how that transpires. Now we can corroborate that with the Dow Transports. So if I bring up the chart on the Dow Transports, and you can see here Doji candle again, so you've a Hanging Man plus Doji candle. It's not exactly a bullish sign, is it, folks? Okay, so that's basically what we're dealing with at present. Okay, and looking for the markets basically to guide us from that perspective. So again, daily chart, there's nothing really. We're in an uncharted territory from that perspective, certainly making new highs. It's as you can see there, I did expect a H&S formation. That obviously didn't transpire, and the markets are certainly looking on a weekly chart very, very bullish. Okay, but that doesn't mean that there's not going to be a short-term pullback based on all the obviously examples and the variables that I'm observing at present. Okay, so that's basically what we're looking for. 10-minute chart, as you can see, the market looks as if it's going to be making a lower high. We certainly seem to be respecting this potential scenario here, so watch out for this wedge pattern at the present, and this basically will be the important thing to observe. Okay, now certainly if that lower high does transpire, then obviously down we go with ferocity. Okay, right, now that we looked at that, let's have a look at the S&P 500. S&P 500, as you can see, we've got this key trend line here. It's held. It's a doji candle on a daily chart. The 60-minute chart obviously is indicating resistance here. We did have several resistance levels which it has broken above, and it's basically totally neglected. So we neglect them, neglect them, neglect that, neglect this, and that's a horizontal support line, I suppose, what we can rely on for now. Do we have any other key trend line? I mean, that's probably the only trend line that we're observing for now. Okay, and there's nothing really else above, and we just watch, basically observe, and remain patient and see if we can break out of this trend line. If we do, then obviously downside opens up to 2000. The 2000 level certainly opens up, but ideally it's this unfilled gap here that everybody will be looking out for at 1995. So I will not be surprised if 1995 is hit this week. The first gap obviously will be at the 2010, which I'll go into on a 10-minute chart, but watch out for that 60-minute trend line, key trend line. Start from the pivot low on these 22nd, and obviously if you try and obviously draw it across, that's basically where we are at with regards to that. So certainly watch out for that to break and obviously move lower. Looking at a 10-minute chart, again you're looking at a potential H&S formation. As you can see, I've already been doing some homework, and obviously I've already drawn that in. Okay, so watch out for that going into next week. We have this unfilled gap here first of all to watch out for, which is 2010, which I've already explained, and the next gap that we're going to be observing thereafter will be the one that I've already referred to. I think it was 1995. Okay, watch out for this level as well, 2000, obviously psychological level, but they are levels 20, 10 and 1995, two key elements for the S&P. If we do hold a high here, and we put in a lower high from the open, so the high was 2034, neckline is 2025, so you're looking for a 10-point move. So 2015 certainly is not out the equation. Okay, so 2015 from the outset, and I won't be surprised obviously if that's hit overnight in Asia. Then we'll take it from there. Okay, now let's corroborate that move, or corroborate the strength and weakness of the S&P 500. and we can do that with the Russell 2000. Okay, Russell 2000 a daily chart certainly seems to be into some type of resistance here. Obviously that gap level there, looking for potential double top resistance for now. 10-minute chart certainly seems to be bullish, but again into that double top resistance. So certainly into resistance on the Russell 2000 and the 3000 Russell, which I always tend to confirm. We are into that double top. We've put in a doji candle, so we'll certainly keep an eye out for that. And it's the same type of trend line again. If you basically take the pivot low from here, you connect that across, and that will be our key trend line to observe going into next week. Obviously we break below that, then obviously it opens up several areas below, and we'll see as the fundamentals come in and confirm. Again, same type of pattern with the S&P. If we can remain above this pivot low high here, which is at 93.30, 93.70, currently at 93.60, create this right shoulder and obviously move lower, given the fact that Asian data was weaker was certainly weaker, and obviously you've got news out of Russia and Palestine, Israel, etc., with certain skirmishes, and obviously Iraq as well. So we'll see how all that transpires. Okay, so I've looked at the Russell, also the Wilshire. I have been told to observe by Anna Cooling the Wilshire 5000. Again, key trend line, diagonal trend line resistance, doji candle on a daily chart, 60 minutes, same trend line. Okay, very similar trend line to the S&P 500 rest. So again, we'll observe that. And 10-minute chart, again, like I said, is the key HNS pattern. So that's something that I'm definitely going to be observing going into next week. Again, it's all about making that lower high. If we can't make that lower high, can create this right shoulder, then obviously the bearish side of the equation is certainly in play. So from my perspective, I am firmly entrenched in the bearish camp unless proven obviously otherwise or proven wrong, and that's all part of the game. It's obviously doing your analysis, putting forward your arguments for and against, and we have our stop losses to protect us if we're wrong, and we live to fight another day. Okay, so back to the trenches we go. Okay, so that's basically my summation of the US markets, really. I mean, I can't really think of any other angle that I can obviously adopt here, other than the fact that obviously we can look at the German DAX, because that's generally the one that gives you the clue. And as you can see from my perspective, you've got a HNS formation on 60-minute chart. As you can clearly see here, we've got unfilled gaps below that we need to close, break out of this rising contracting wedge type pattern. Okay, looking at 10-minute chart, again indicating weakness, needs to close the gaps below. And given the fact that post Draghi we failed really to rally, because there certainly seems to be a lot of opposition with regards to implementing QE, and obviously the economic data still remains weak, so certainly not looking promising at present. Okay, I've already done my analysis of the FTSE. The FTSE is obviously indicating a move south as well, so all those variables together, and certainly isn't looking promising for US markets. Okay, so the key will be the yen, as always, and obviously if the yen or USD JPY breaks through 115 or goes to 116, then obviously my analysis is invalidated, because the Kool-Aid obviously takes precedence and the stock markets continue to short squeeze higher, and that's basically the Kool-Aid effect. Okay, our job is just to basically do our analysis, and stop losses are in place. Okay, so risk on, risk off, wax on, wax off. Goodbye now.